Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It's the 10th of June, 2026. I'm Mark Gardner. Is the chip stock run over? Now, we had, obviously, we had Apple falling away, that very underwhelming, response to their new AI that Google's developed, or the new version of Siri. It's kind of like they put a mustache on Clippy at Microsoft. But look, as you can see there, the left-hand side of the screen, Apple down, all those ones through the middle there, Oracle, Palantir, a few of the software stocks. Tesla's been moving with those as well. Qualcomm, Broadcom, every com is down. So, and we've had a switch back to, a few more of the traditional names and defensive names there in the green. So yeah, bit of a general shift out of tech and into the traditional companies. We did have crude oil head lower overnight. It was around about 88. It's jumped back up about 1% in the aftermarket, just on the back of there being a helicopter was down by an Iranian drone, and then first ever unmanned rescue plane or aerial craft. Went in and rescued them, which was a good show of military technology. Not sending manned craft to go and rescue people, but they got them all back. But they've now launched attacks. So, but I mean, I've got to say that the move in oil's been muted at best. Last time I checked, and I'm just checking here now, it's not even up 1% in the aftermarket, and since this happened. So. We're around about 89 in light crude. There are a lot of energy analysts screaming from the rooftops that they're running out of reserves, but it doesn't seem to be reflected in the futures prices, which is very bizarre. I would have thought that those guys would know what's going on essentially. The big dog tonight's going to be CPI in the US, and that's why it was probably a bit of a roughly pretty quietish night, to be honest. But Bloomberg consensus for headline CPI is 4.2% year on year, prior 3.8, crossing 4% for the first time in 3 years if it gets there. And now the lovely thing about CPI is that if it doesn't suit most analysts' arguments, they usually just turn around and go, oh no, but we're stripping out this and this and this and this. A lot of stuff's already stripped out of it, to be brutally honest. Anything that's inflationary just ends up getting stripped out. So, I mean, 4.2, I would imagine, would be, realistically the equivalent of much higher. Treasury yields were sort of drifted a little bit lower overall. But all eyes are going to be on that, essentially. Nasdaq down sort of nearly 5% for the last 5-day period. S&P down 2. We have had a 10-week run, people. So I think you probably want to, be really reviewing those portfolios and having a look at what you want to own and what you don't want to own if this market has a bit of a run to the downside. Gold also actually crossed the negative for the year mark for the first time this year. It's been obviously it had that rally early in January and has been hovering $1,000 higher ever since. But first time it's actually gone into negative territory for this year, despite the fact the US debt and everything. We've had two or three geopolitical situations. The US debt's just spiraling out of control. No government in the world wants to address their debt, including Australia, including Europe, including everywhere, basically. And the US, it's piling up at less than a trillion in less than every 100 days. And Trump's actually making it spiral quicker than what Biden was, despite running on a platform of, I'm not going to go into other people's countries and I'm going to fix the debt. He's made both worse. So I don't know the moving gold's around the fact that obviously we've got bond yields higher. And then whenever bond yields go higher, that's generally pretty bad for gold, because the criticism around gold or stores of value is they don't yield. But, I would say overall, I think this inflation, particularly from the energy side, is going to come through and be pretty sticky, but there's nothing that monetary policy is going to be able to do about it. So this CPI number will particularly really set this scene for next week's Fed meeting. Kevin Warsh, first as chair, apparently he's having a press conference. There was talk that he wasn't going to have a press conference. So that'll be interesting to see, how firmly the strings are attached, to his puppet master, Mr. Trump. So if you want to, we sort of predicted this on our podcast on Friday. For those of you who don't know about it, Bulls versus Bears, Kai, myself, and Jonathan do this every Friday. Have done for a couple of years. It's a pretty informal, podcast just around markets. We have a bit of a laugh, but cover what's happened in the week, what's coming up in the coming week. Usually there's a bit of a specialist topic. We've done things like the space industry. We've done things like software. We've done things like conspiracies. So do yourself a favor, go on to Spotify, YouTube, or Apple Podcasts, and you can find it in there at MPC Markets. On the commodities here, as I said, gold was down. Silver's obviously also getting a bit of a hiding, as well as the uranium and lithium. Fears now around that stagflationary environment, high inflation and obviously no growth, and interest rates are going to make it worse overall. So it's probably not going to be a great day, I wouldn't imagine, for the for the Aussie market. There were some sort of corporate announcements, which I don't normally do, but obviously I'm a little bit late this morning. So I think Sigma Healthcare, who owns Chemist Warehouse, is potentially looking, is among the bidders for UK's Boots, which is a $14 billion transaction, which would be quite enormous. Megaport signed a vast data global AI platform deal. And following the $425 million Latitude acquisition, and Charter Hall completed some financing, and Helia got some new management. So overall, we're not looking at too much probably from today. This is a chart on Hyperliquid. So for those of you who do subscribe to our crypto recommendations, and it's not for everyone, we realise that, but we do have them. Young Finn does them here. Hyperliquid is it's essentially a blockchain futures exchange. It's been running for a while. And make sure you're sitting down. It actually has a PE. It makes money. So Finn recommended Hyperliquid. I don't know, probably 3 or 4 months ago. I dare say it's doubled or more now. I'm not across the particular details, but SpaceX pre-IPO is listed on this chain. So we're sitting here about 155 at the moment. The IPO price is 135, so it is slightly higher, but obviously it was around the 220 mark, and it's done nothing but drift off, and some pretty decent volume gone through in the last couple of days as well. So there's a lot of talk around essentially Elon is just trying to, the whole reason behind him trying to rush through index inclusion is that he's pretty much passing a giant stinking heap of non-profit making crap to retail and pension fund passive investors. I tend to probably agree with that, and there are parallels from back when I think Amazon listed a few months before the 01 crash. So there were, but this is a quote that I heard from Jonathan this morning was, this is an exit opportunity that is worth more to the people exiting than the last decade's IPOs all combined. I think 1.75 trillion is absolutely absurd, and unless you're really into your space, we wrote an article on it yesterday. I mean, and you're a bit of a space nerd, I'd be leaving this alone till it hits about maybe $50, because I reckon that's where it'll get in the first year at some stage. 100 times sales is the dumbest thing I've ever heard, no matter how good the future prospects of the industry are, which, knowing Elon, will be 5 years late. As I said, CPI tonight, then we've got Oracle Thursday, Adobe Friday, and not much else apart from that, actually. So yeah, we'll. Kai and I did have a webinar yesterday. Sorry, that's not live today at midday Sydney time. It's on demand at the moment, so you can scan that, sign up, and then you will get the recording of the webinar. Some pretty good tips in there, what not to buy, what to buy. So, you know, something for the bulls and the bears. But yeah, we will have a good day, people, and we will speak again tomorrow.